I'm glad to tell you that it is not possible to buy a property without any down payment. The reason I'm glad to tell you this is because if such a program did exist, it invites speculation and artificial inflated valuation that is disjointed from reality. In other words, we're ballooning the market bigger than its actual worth, and a balloon pops eventually when it's too inflated. We don't want a real estate market crash happening in Canada. There are a number of down payment sources that are recognized by lenders in Canada. The first one being the most conventional source, which is your own personal savings. What's important is documentation, the paper trail of the history of the funds, bank statements to show the money has been in your account for more than 90 days. If this money comes from your own savings overseas, be prepared to show the documentation to trace the source and the history of the funds going back to 90 days. Also, you can tap into your RRSP savings for down payment. This is eligible through the Canada's Home Buyers Plan program. Watch my other video where I unpack all the details about this. When you have used up your own resources, mortgage lenders allow borrowers to receive gifted down payments from their family members. The most common sources are your parents, siblings, grandparents, or guardians. Non-family members can also give you money to use as a down payment, but there are few lenders who allow this. In both cases, documentation is also important to prove where the money is coming from. Is it a gift instead of a loan? Yes, it is possible. There are limited lenders who allow borrowed down payment to qualify for a mortgage loan, but it is possible. Keep in mind when you borrow a loan and use it as a down payment, you are responsible for making payments to the original loan and the mortgage loan. You are carrying two debt burdens. This is why not many people can qualify this way, since not many people have the income to afford this. Most times, they don't even qualify based off the lender's limit to debt to income ratio. Qualification point of view, it does not matter. Essentially, the borrower needs to be able to carry the borrowed loan and the mortgage loan until maturity and pass the qualification criteria from the lenders. But from an affordability point of view, it is a big difference between acquiring funds from a secured point of view versus unsecured loans. Unsecured loans are almost always higher than secured loans for the main reason that the lenders do not have any collateral when they lend you money through unsecured loans. Higher risk, higher interest rates, which means higher borrowing costs to the borrower. Yes, that is another common source of down payment. If you own a house as your principal residence and you are selling it, the proceeds from the sale can be used towards the next purchase of the next property. There are tax benefits to selling a principal residence, by the way, which are best discussed with your accountant. Going back to the mortgage side of things, if timing is an issue between selling and buying, there is bridge loan options to assist with the transition. It's a short-term loan, but requires a firm agreement of purchase and sale, among other things, to qualify for it. Yes, that is eligible as a source of down payment. Lenders will ask for the documentation to trace and prove the source of funds. It depends, and it comes back to common lending sense. Lenders will want to see documentation to trace and prove the source of down payment, documents like receipts, invoices, and bank statements. Cold hard cash without traceability to the source of funds and its history is not acceptable. I'm Jermaine Hinds, a broker based out of Toronto. At Matrix Mortgage Global, we do mortgages Canada-wide.